I'll also record this so you and others can watch it if you need to. Just waiting for Thinkorswim to
Oh,
open up. It takes a little while to open.
yeah, no worries.
Like computers causing weird issues when I have too many programs open too. So if my mic cuts off, just let me know. I could use a computer mic. I don't know why. It's
Oh,
like
okay.
when I
Yeah, no
have
worries.
like I'm using my good mic and then for some reason it's like not getting, I don't know, voltage or whatever in it. And sometimes it cuts off a little bit. I'm not sure.
Oh, yeah, I know, especially when you record your screen too, it's taking a lot of like
Yeah.
bandwidth. So
All
it's all
right. Let me
good. Were you pretty bit busy with all the new sign-ups
you could
today?
say that. This was the biggest month we've had.
Huh,
All right.
nice.
Um, okay, can you see my screen?
Mm-hmm.
All right. What kind of trade you want me to show? I could show a bit of everything if you want. Like how to place it.
Well, so I mean, I guess the starting off with the safeguard trade. So it sounds like you basically do them every other Friday, and
Right.
then you add on to them as you see fit, from my
Yes.
understanding, correct?
Uh-huh. So we do them every other
Okay.
Friday based on what your account size is. So every MES safeguard you're going to do is about $1,100 total. And then we do them every 2 weeks. They're about 120 days out. So you're looking at about 4 months of time that you're going to do that. And that's about eight total trades because if we're doing it every 2 weeks, it'll be about two a month. So about eight total before the first one we did cancels out. Does that make sense?
Mm-hmm.
Yeah. So just doing simple math there, if it's 1,100 per trade times about eight of them, it's about $8,800 to do every single one of my trades if you're doing one contract. Does that make sense?
Okay. Mm-hmm.
Now, if you have that much, you could just do one contract every 2 weeks. You're not necessarily going to need the full 8,800 because the first ones that you do might close out before the last ones would.
Mm-hmm.
And if you close it out, you get your buying power back. And so some close it out around 90 days or so. So the average is 93 days is when we hit the naked puts profit off a lot of back testing, like over 10 years of back testing. So sometimes it might be more, sometimes it might be less. That's just what the average is. Yeah, a few
Mm-hmm.
more coming in. So let me show you how to place the trade. Um, Again, based on funds, if you have 8,800 or about 9,000 or so, you could do one every 2 weeks.
Mm-hmm.
If you have more than that, you could scale it appropriately. Easiest way. Hey, Jamie, how are you?
Good.
I'm just going over the safeguard now. I just literally impromptu office hours. So feel
Mm-hmm.
free to ask any questions. It's pretty wide open here.
Okay. Yeah. So I'm starting out with like I'm just gonna deposit a $10,000
Okay.
into my TD Ameritrade just for easy math
Yeah,
kind
that's
of
a good way
thing.
to go. So $10,000 divided by 1,100, you're looking at about nine total contracts. So doing one
Okay.
every 2 weeks is perfectly fine. You could probably get away with doing sneaking in an extra one. If the market drops a bit, you could add in an extra one at that point. I'd usually recommend doing it when the market's down a little bit because then the next strikes are even lower. The market right
Mhm.
now is really high, and there's a good chance that it might drop. So I wouldn't want to like go all in with like all 10,000 at once. We want to stagger these out. And then what's interesting
Mhm.
about it is after about 2.5 months or so, you'll start to usually get a lot of those naked put profits in, and then it's just a ongoing taking off the previous ones, adding on new ones, and recycling it in over and over.
Okay. So two quick questions. So this is only for the MES, right? This is not for SPX or anything like
The
that.
dog's barking. You could do them for MES or ES. If you have a large account, you can do ES. So ES is 10 MESs.
Hmm.
So instead of 1,100, you do use $11,000 for an ES. That's
Okay.
recommended if you have a larger account, at least 50 grand or so. So then you could
Okay.
consider sneaking in some ES. I'm at about a 52 grand account now, and I plan on doing some ES in January.
Okay. So this is only for MES specifically, like
MES
this.
and
This.
ES, yeah. For
Mhm.
lifetime for all members, I'll do occasional ones on gold. That's \GC, and I'll do oil \CL.
Mm-hmm.
And it's the exact same type of trade. We're still selling to those naked puts, buying a put debit spread. And I'm not going to add those in every 2 weeks because that's going to need a lot more funds. Those need about $6,000 to do one of them. So
Mm-hmm.
I think for a
Okay.
52 grand account, it's okay doing one of each. It's about 12 grand total. And then the other about 35,000 or so, I'm doing mostly safeguard with MES. I'll do some of the strangles, some of the monthly naked puts and whatnot.
Okay. And as far as like allocation of funds for each, so you said like for instance in this 10K account, right, scenario, you put out like one contract
Mhm.
that's just 10% pretty much,
It's
right, of
about,
your
yes.
like
Yeah, it'll be about 10%. So it's going to take you a little time before you're using the full $10,000. You could do shorter dated things in the meanwhile if you want to, like those monthly naked put, and then other
mhm.
strategies. But as you'll
Okay.
see, once you get the ball rolling after a few months, it's pretty just ongoing. Take one off, put one on, take one off, put one on. So
Gotcha. Okay. And then the other thing that didn't really make sense, which I read through the ebook that you have, and in the in the Google Docs, but as far as like max loss, that's mentioned over there, like it's big numbers. It's like
yeah.
39,000 or whatever. So how does that, like I don't really understand that. Like how do you
So
kind
the way that that would happen is if MES went to zero, so that's essentially the SPY or SPX going to zero too,
of,
which
which
means
is
that there's
impossible.
pretty much there's no more economic, like production in the US at all. I would worry more about the nuclear fallout first because there are
Yeah.
going to be nuclear bombs going off at that point. However, that doesn't mean that they can't have a big black swan event where you're down 10% a day. Luckily, there are little safeguards in place. You could always close these out if you needed to. And that's the kind of thing I'll go over with the group if it ever happens, exactly how I'll close it out and manage it.
Okay. And then so with these safeguard trades, are you assuming like a long position or a short position? Or like what's your kind of outlook as
So let me
or
let
are
me
you
go over how
both?
to enter. Let me go over how to enter the trade here.
Okay.
So on Thinkorswim, you type the backslash key. It's right near Shift, and then
Hmm.
MES, and then just press Enter. And then you'll have your option chain of all the expirations. I look for the closest to 120 DTE in most of these trades. Occasionally, I'll do a shorter dated one. Like the last few months, I did about 60 to 90 days out because I was taking advantage of closing out some other ones. But usually, we'll go around 120 days. The closest we have around right now is 109 or 144. So unfortunately, we don't have one near 120 days. I'm gonna most likely do the 144 one on Friday this week. So it'll be about 139 days or so. So with MES, unfortunately, you'll have to deal with that sometimes. If your account's larger and you can go backslash ES, you're gonna have some that are near 120 though, because there's more expiration dates for the ES instead of MES. Like I could do 122, for example. So that's just an FYI. If your account's bigger and you could do those, you could consider that. But it's not really a big deal. You'll see the returns are pretty adequate anyway. So anyway, I'll click on the 144. We're selling two naked puts, and then we're buying a put debit spread. So the two naked puts are we're taking in most of our initial premium. We want to be happy with the amount of premium we're taking in for it, because otherwise it doesn't make much sense to actually take it. The put debit spread is meant for protection. So in case the market drops a little bit or even a decent amount, those debit spreads could pay off. And most likely the naked puts will pay off anyway. Okay. So we're going to
Hmm.
look at around a 20 premium. That's where I usually start around. It ends up being around a delta of point, usually 0.5 to 0.9 or so. Right now, the volatility is pretty low. So the VIX is low, meaning we're usually going to have to go a little higher delta. In this case, so we're going to go around 0.07 delta here. If you see at the 38.50, there's a bid of 20. So that's what we're going to be able to take in at least 20. We'll be able to take a little more because of the bid ask spread. Right now, it moved up to 21 anyway. So I'm going to click on the 38.50 on the bid. And then instead of -1, go -2, because we're selling 2 of those contracts. And then you want to just confirm and send it. I'm gonna do this on a paper account, so it
Mhm.
probably will fill. Actually,
Okay, so you
paper is
have
gonna say
two.
accepted first, and you gotta wait a little bit.
So you have two contracts, but I would be doing one contract in my
No, you're
case.
still doing 2.
Oh, I
The
still
the
really.
full $1,100 for the trade, you're gonna do 2 naked puts, and then 1 put debit spread.
Oh, I see. Okay, that's the 112. Gotcha.
Yeah, the 112 is the safeguard trade.
Gotcha.
So assume they got filled. Then we're gonna do a put debit spread, and I like to pay a debit between around 7 to 10 in most cases. The way to do that, you're gonna look around the 0.25 or so delta. So right here around 0.26, we're gonna click on the ask because we want to buy this top one. And then we're gonna click 50 away. That'll be 33.50. Click on the bid. You want to hold the control key and then click the bid. So hold control, click bid, you get what says vertical here, and that's what we want, okay?
Okay.
And then you're essentially buying a 400, selling a 350. You can see the debit right now is between 8.25 and 9.5 or so. You want to try to get filled at the lowest debit you can. So around 8.25, 8.5 or so, you should be able to get filled. Confirm and send. You have to do these as 2 separate orders. So you have to do the naked puts as 1 order, then you do that put debit spread as a 2nd order.
Okay.
Like none of the brokers will let you do this all in 1 order. So you have to do them as 2 separates.
So this vertical spread, it was one order, right?
Yes. So that's 1 order. I usually do the put debit spread first to see what the debit is, and then I do the credit after, just so I could be aware of what the numbers are. It doesn't really matter. You could do the naked puts first. It's not a big deal.
Okay.
Jamie, any questions so far?
Can you do? Yeah. Are you gonna do the second order now too?
I just did
Like,
both.
I'm
Oh,
logging into a paper terminal right now because I was looking at, I was trying to follow along what you were saying, but I was on a live account and I'm like, don't do this. Don't go
Yeah.
mean,
clicking things. Don't go
it's-
clicking things you don't understand on a live
yeah,
account.
don't click things you don't understand, obviously.
Right. I'm gonna
But the
definitely
problem
review
is,
this recording too, just to kind of make
I,
sure
I didn't get a chance to look at your new stuff today. I meant to, but I had a trade open on futures for like 3 hours today.
yeah. So right
Okay.
now
It
it's
just went sideways.
accepted. On paper, it's accepted. It's not filled yet. Paper trade takes a little longer to get filled for some reason.
Okay. So this vertical is the first order, then the single is the naked puts
Exactly.
or naked. Gotcha. Okay, that makes sense. And then forgive me if this is like a stupid question or what, but
There's
is
no
this
stupid questions.
so with these kind of trades, is this assuming a long position or a short position? I guess that's what I'm like are you
So
wanting the market to go down, wanting the market to go up?
let me show you on the analyze tab. So what you can do there is put the full order in, control click, that's my debit spread part. And then I sold around the 20, 30, 50. I'm gonna hold control click and then do 2 of those. You can't
Mhm.
get filled with this, but you can see the analyze tab. So
Mhm.
right now I have a sample trade. I'm gonna remove that. Just remove everything on here. There's something sneaky in there. It's still there. All right. Now on the trade tab, right click, analyze trade. And then you're gonna see the risk profile of the trade. So we're at 46.63. We're at this red little line here. It's a current price. If we stay where we are, if we go up any amount, it could go up to like 6,000, doesn't matter. Or if we go down all the way to 4,400, that's where I bought the put of the put debit spread, we're making this profit. And the profit number right here is, it's hard to see it, about 126 or so. So you'd make $126 if the market stays anywhere between here and here. So
Mhm.
ideally, you'd want the market to stay where it is, go up or go down slightly. In most cases, then you don't have to worry about any of this, and you're going to make a good profit. But what's really neat about this trade is if it drops below the 4,400, you can start making even more money because the put debit spread is actually profiting a little bit. Does that make sense?
Mm, yeah, that makes sense.
So we bought a 4,400, sold a 40.
And what if it goes up?
50. So if we get below the 44.50, sorry, 43.50 right here, then you're at the max profit zone right here. It's called like a trap profit because in this case, the put debit spread is at full profit here. And the
Mhm.
naked puts would still end up closing at a full profit if we ended anywhere over here.
Okay. And when does it start going into a loss then? Is it at like 4,100?
So at expiration, which is again 140 or so days, you'd have to go all the way down to 38.06. The way to figure that out, it's the sold naked puts, but then you subtract the put debit spread pretty much about
Mhm.
42 or so minus it. Because you could, the 40, sorry, the 38.50 is right here. If it starts dropping a little bit, your profit will go down a little because you would theoretically be assigned on your naked puts at that point. And then the break even point's at 38.06 or so.
Hey Tommy, quick question. Are you familiar with like deltas, like the Greek deltas?
Yeah, a little bit. Like just
So this trade is a positive delta trade. Um, so technically it is I guess considered a long. You'd be long the market because
Mhm.
positive delta is technically. Am I explaining that right, Lance?
When you first enter the trade, yes. As the trade gets closer to expiration, it switches and it turns more negative delta. Because if
Yep.
you look at this purple line here, as I get closer and closer to expiration, the purple line will turn into the green line. And then you hit like a magic spot around 70, 80 days where it's okay if the market drops because the naked puts went down so much. And then you would want this debit spread to pay off.
Mhm. Okay.
That's one of the beauties of the trade. The deltas actually turn to negative near the end. But as you're adding in new ones every 2 weeks anyway, it kind of cushions the blow a bit on your deltas. That's more advanced. You don't have to worry about that too much yet.
Yeah, and then for exiting like on the trade, you only exit when you're at a certain amount of like a percentage
Yeah.
of
So on the naked puts, remember we're taking in around 21 or so right now.
Mhm.
I take 90% of that as profit. So if you just subtract 2 pretty much, if you get to a 2 premium here, I would buy it back at that point. And the reason why I buy it back is if you get rid of the naked puts and you just leave this put debit spread on, you don't have any more risk in the trade. Because the only risk was essentially your naked puts that you want to decay and be worth a lot less than what you started with.
That's the part that's a little fuzzy for me. Like I don't I guess that's like once I'm actually trading and actually looking at it, then I'll probably figure
So
that
let's
out. But
let's look at the net credit when we're starting the trade. So we're taking in about 21, but we're selling 2 of those. So I'm going to multiply by 2 of them.
mhm,
We're taking in 42 premium on the naked puts. But then
mhm,
you have to buy the debit spread. That's about 8.5 or so. So I'm going to subtract 8.5 since I'm
mhm,
buying it. Our net premium that we're starting the trade with is 33.5. For
mhm.
MES, there's a 5 multiplier for it. So to figure out the dollar amount you're taking in to start the trade, it's about $167. Okay.
Mhm.
Now you want this 21 to be worth a lot less. Let's say I could close this at say 2, and
Mhm.
there's 2 of them. So 2 times 4, I could close the naked puts for about 4. It'd be 4 times 5 technically. So it'll be subtract 20 from that because I'm looking at dollar amounts right now. So at this point, I would have a net profit of $147.50. And that's assuming the naked puts are worthless. Like it goes to 0. Okay.
Mhm.
So that's a really good trade because 147.50 divided by about $1,100 we're using for the trade, you're looking at 13% return on your money right there.
Mhm.
And sure, it could take 90, 100 days or so, but if you're getting 13% in 3-4 months, that's still a good monthly return if you do that over and over again.
Mhm.
And how long a time frame was that? You were breaking up a little bit there.
Oh, sorry. So the average trade we usually enter around 120 days, and it usually takes
Okay.
about 93 days to close it.
Okay,
So usually 3 months or so.
okay,
Well, in around 3 months, this premium will most likely be around 2. It's worth closing it out, in my opinion, because then you have no more risk on the table. If the market drops like right away after that, it's good for you because the put debit spread is still there. And then this might pay up to 50 more.
Now, Lance, you rarely close the put debit spread unless it's in a profit.
Yeah.
Yeah,
40,
I just count it as a complete loser as well. So
right. And what was really good about early October, mid-October, was the market dropped a bit, and these put debit spreads were starting to pay off as well, and that's what made the returns even better. Again, I'm perfectly happy with just the naked puts closing out at the 90% profit and the debit spread being worthless. So that's still a good return anyway.
Mhm. Okay, sometimes you lose on the debit, but you gain on the naked
Yeah.
puts, and
You're
that
gaining a lot.
offset.
You're gaining a lot more in your naked puts than you're paying for the debit.
But the
And
vertical is what's required to kind of hedge yourself
yeah,
for
the vertical is like a mini hedge in the end because if the market drops below that 43.50 in this case, we're making an extra $250 on the trade because it's 50 width right here times the 5 MES multiplier. So you can make an extra $250. That's this little hump right here. Because this is 250 more than over here. Coming. There's more advanced things we could do with those put debit spreads if the market drops a bit, but I don't want to confuse you guys too much yet. So we'll get there when the time comes. Hi, Derek. How are you? Leaving it open
Gotcha.
session. Any questions you have? Very impromptu here.
Yeah, no, that answers everything for me. So I'll just kind of so you do this on every other Friday, with this
Yeah.
Friday being okay.
Yeah, so this Friday will be the safeguard. It'll be around 12:30 Central Standard Time. That's during my lunch. It's the time I could actually have the place to trade. And
Okay.
essentially you just put it on and you wait a while because these 21 of the naked puts will take a while to get to 2, and then we just close it out. But then just imagine every 2 weeks we're adding on a new one. So these kind of stack onto each other.
Mm-hmm.
and it gets to a point where you're putting one on every 2 weeks and taking one off, one on, one off.
In many cases, yes. It depends on when those put debit spreads are at 2 or so. Like I have a few right now that are 3 and 4, very close. And it wasn't even 90 days because the market went up a lot. It's only been about 40, 50 days. Theoretically, I could just close those out now. I'm not losing too much money, 10, 15 bucks. But I'm going to wait it out on purpose not to confuse you guys. And I'll show the mechanical way of closing these.
Do you sometimes close out the debit, the verticals, and keep the single, or no? That's like
Rarely, but I did do that in October at one point because this paid pretty much the full profit. I still had the naked puts on. I left it on in that case because I still had a lot of other trades of these going on anyway. And then the market went up after that. So I closed the naked puts after it. I wouldn't necessarily recommend doing that too much because you still have
okay.
risk on the table. You still have your naked puts, but that's an
You'd
option.
rather close out the naked puts first and keep the vertical.
Yeah, because if you close out quite a few of these naked puts and you have a lot of these verticals just waiting there, I have a lot of them right now that are near 4,100, 4,000 of those naked puts. Sorry, the put debit spreads, and they're most likely going to be worthless. But I might as well leave them on in case the market drops a lot. If the market drops, 7 to 10% the next month, I'm going to do really well because I have a lot of these just lingering. And I have quite a few of these where I already closed the naked puts anyway, and there's no risk anymore. Like I already made the profit I want on the trade anyway. Like I don't mind if it goes to 0. So that's the beauty of these as you stack them on after a while. Like you could have a lot of these verticals just waiting. It's almost
Mhm.
like I win if the market stays where it is or goes up because I'm winning on the naked puts. And I win even more if the market drops because those verticals pay off. It's a beautiful trade. As you'll do it more and more, you'll see how awesome it is.
Okay, and then to add to these, as far as like a secondary strategy besides the safeguard trades would be like a zero DTE, probably like 3 times a week, like the Mondays, Wednesdays, Fridays kind of
Yeah, that's a
deal.
possibility. There is a bit of swings in your account that way because the zero DTEs, they usually make about I have 2% or stop out at 5-6%. So you want to be careful on that. You're gonna have a lot of bumps on the road if you do a lot of those.
Okay.
I would consider more of like 30, 45 or so days out if you wanted to do a few while you're waiting for the next ones to come on a bit. Because yeah, you're not going to use your full 10 grand for a while. It's going to take a few months before you get there.
Mhm.
Again, no
Do you
rush. You're
recommend?
learning here, and we're like once you get to that point in a few months where you're seeing how this works, man, you'll be using the full 10 grand anyway.
Hey Lance, what's
Mhm.
your thoughts on him putting a lot of it in BIL just to
Um,
kind of
um,
just to get something rather than it just sitting there
yeah.
in cash?
The issue is it's not going to be a ton of money with 10 grand account buying about 3,000 in bill. You're looking at maybe $7-8 a month. It's probably not even worth it.
Hmm. Besides doing the zero DTE, what would you recommend as far as doing a secondary strategy besides safeguards? Anything else from your
Are
arsenal
you
of strategies?
I forgot, are you just safeguard or are you lifetime for everything? I
I'm
forgot which.
lifetimes. I
Oh,
yeah,
okay.
I'm
So let me show you on the Discord here. I would probably do more of the I don't know what happened to my screen here. I would probably do more of the put put credit spreads that are in the option trade channel. So if you go
okay.
to trade alerts, option trades right here.
Mm-hmm.
Every day I do one of these, same 12:30 lunchtime. And these are typically between 20 to around 50 something days out. And I look for about 3 or 4% on the trade for these. So these trades are usually stocks that are moving up, have good momentum, or it dropped a lot and I could sell a put credit spread below the next support levels. Again, very low delta, 0.08 to 0.12 or so. And then
Mm-hmm.
I usually take in anywhere between around 25 to $40 on these per $500 that you use. And then I usually close them out at around $5 or $10. So that ends up being about 3-4% of your money.
Okay, what's the buying power needed for like one contract
Only
for
only 500 because these are 5 WIF spreads.
oh okay.
So yeah, it's not much at all. If you're since you're waiting around with the 10 grand, I would do some of these just to have some of your cash going with the 500s.
Mm-hmm. Okay. And then as far as like the these stats on this, like I couldn't so I went into like the stats you posted on the Google Doc, but I couldn't really understand how much you made or how much what's the potential profit off of that. Like how, I
For the
guess I don't know.
safeguard or for here's my family. For the safeguard, you mean?
No, not the safeguard, like the ones you're posting on the options trades. So
Yeah,
like,
so those are from trades that I entered in the past. If you look at the credit spreads tab over here,
oh, that's where you go. Okay.
yeah, credit spread tab. So these are the entry premiums that I took in, and then these are when I close them out. You just subtract what you took in minus what you bought it back for, and that'll be the net profit or loss. And essentially, you
It's
divide that by
percentage.
about, and then these are
Uh,
the dollar amounts, and
oh,
then
gotcha.
and then you divide that by 500 pretty much, and that gets you your percent return.
I see. Okay. Okay, that makes more sense.
Yeah, it's under credit spreads. For the actual money that I make, I'm only tracking that on my futures trades. So if you go to the bottom where it says futures profit, these are
Mhm.
where this is where I log my profits and losses for every trade that I do in the futures. I'm not logging the amounts for the stock based. Because my main focus is to grow the futures.
Okay.
Like you can see, it was a pretty busy November. These are all the closed profits I had. It's been pretty crazy. This is
Mm,
not a typical month. It's 6.5%. I'm trying to get about 2.5%. It just happened to be really big bull market, and I was able to close stuff quick.
mhm.
Derek
Gotcha. Okay.
Derek had a few questions in the chat. Let me see. None of these ever gone below my naked put yet in a year and a half, which is pretty amazing. That doesn't mean it won't. It will at some point, but it hasn't yet. Because we're really far away out of the money. We're looking, in the last trade that we did on paper, 38.50. We're at 46.63. So if you subtract that, it's about 860 points out. Divide that by the current price. We're looking at 18% out of the money on that trade. So sure, the market could drop 20% or more in the next 4 months or so, but it's pretty unlikely.
Would you make more money if the market drops or if the market goes up?
If the market drops a little bit or a decent amount, you make more because of this big tent here on the verticals paying off. You don't want huge black swan drops right away because that could get you negative. But you would want like a slightly down market. Again, I don't mind if the market stays where it is or goes up or down a little bit because you have to be happy with this. If this profit is adequate and it was what 13% on your money, sure, it took about 4 months, maybe 3 if you close the naked puts, but that's still a good return. So I'm perfectly happy if it stays where it is. If it drops a little bit, it could be better off, but some of your other positions, depending on when you entered them, could be down a bit.
So are these different instruments than what people would use on the zero DT like SPX trades? I mean, are you doing like
For
credit
ZRDT, I'm just doing SPX credit spreads. So I'm
Okay.
selling a put credit spread or a call credit spread or an iron condor, depending on the market.
Okay.
So it's the same instrument. Like the price of MES, ES, and SPX will move pretty much identical to one another. So if SPX is down 1%, MES is down 1%.
Yeah.
Yeah. In terms of zero DTE, again, you're gonna have bigger swings because you can make 1.5%, 2% in an hour or two, or you could stop out at 6, 8% loss in an hour, possibly. They move
Yeah.
very quickly. I'm personally not much of a fan of zero DTE because the safeguard works so well and there's not much risk. You can sleep well knowing that these naked puts are so far away. I still do the zero DTE, but I do 1 or 2 contracts at this point just to pretty much monitor it for my members.
Okay.
Yeah, and that's up to you guys. If you want to try to grow your account more, you probably want to do a few zero DTEs. In terms of allocations, I did leave a guide on the ebook strategy guide. It says percent allocations and money management. So it's a specific guide to the things to consider and how much to use for each strategy that you see. But since you guys are just starting out, I would do 1 contract on paper for a few weeks, then go into 1 contract in real money, and then do that for a few months at least. Once you see these different strategies, you might start seeing some that you like more than others based on what your goals are. So if you're trying to make consistent 2-3% a month, I think Safeguard is the way to go, and that's why I'm doing this about 75% of my account. If you're aiming for higher percents though, you'd want to do more of your account as zero DTE. But just be aware you could lose money too on the stop outs.
Mhm. Gotcha. Okay. Okay.
It's a fine
That makes
balance.
sense.
It's a fine balance because like we have members in many different risk returns. We have some people that are trying to really grow it quick. We have some retired that just want consistent 2-3%. So they're doing different amounts of contracts depending on their account, depending on their risk tolerances. Got a few more
But
minutes
the
left.
safeguard has stayed like pretty darn close to that 2 to 3% ballpark
Yes.
consistently.
Yeah.
Okay.
It's at
So
least
basically-
3. It's usually 3.5% per month in most cases, and possibly more if we hit up here. So that's why I think it's a really good way to grow accounts.
So
I'm
we're
not in
doing,
any
we're
rush.
doing some more manual trading and we end up maybe making, 3 times the average market return then.
Exactly. which I'm perfectly happy with. Like I know based on how much money I have, how much I'm saving, if I make 2.5% every month, I'm gonna be really well off. Eventually, it's not right away, you know. I'm not trying to get 30% a month, but some people might try for that. It's really based on your goals. I'll open up a new Zoom because we have 2 minutes left. So let me open up a new one. And then I'll post it on the Discord, same place. Okay.
All right, sounds good.
All right, I'll be right back. Close this out. Where is it?